So let's get right into the video. So today I'm going to teach you what a session volume profile is and give you a quick overview. And then I'm going to teach you how to use it to find trading levels. And then additionally, I'm going to teach you how to trade using these volume levels. So basically what the session volume profile is it's a collection of a total session, right? So this is the opening of gold futures on a Sunday until the following Monday at market close at 5 p.m. right? So basically what this is this is showing you the amount traded, the volume. You know, we have volume over time, but what we are looking at is volume at a certain price point. So the amount of volume traded in this 2,722 range, you know, up to the 2,725 range, we have this amount, right? And I have the numbers turned off, but you can appreciate how this area, this zone, you know, we only had a couple candles here, and it makes sense that, you know, we're not in market open, so barely any volume was traded. But in this region, you know, we had a little bit more action. We were chopping around a little bit more in here. I don't know if you can see that, but we were chopping around a little bit in there, and that makes sense. We have twice the amount of volume. That makes sense. You know, right here, we had a quick little, just whoosh, we flushed down, and it was tiny amount of volume. Then down here, you know, we chopped around a little bit. You know, we had just fallen a bunch, so there's probably a lot of buyers stopping this drop down. We dropped down a little bit, and we traded up in this region a little bit more for, you know, many minutes, you know, like almost an hour in total. So there's a decent amount of volume. Basically what you get out of the session volume profile is you're getting the amount of orders filled in that price range. And through that, you extrapolate what is called a point of control. And why that matters to us is basically we are going to create our levels off of this point of control. So what the point of control is it is the highest volume node throughout the trading session. You have this highest node, which is right here. And, you know, we had all of this chop throughout the evening and the morning, and that ended up being the most amount of orders in this particular price range. So what do we get? We get the point of control right here. And that is basically how the point of control is extrapolated from this session volume profile data. And the benefit of this is we get levels that are not just based on, you know, volume over time or something like that. It's like there was so many orders at this price point that basically in the future, there's probably a good chance that price is going to react off of this level. So because there's so many orders here, it's probable that price is going to bounce from this level, or it's going to rocket ship from this level. What you're going to want to search is session volume profile. So when you find the session volume profile, what you're going to want to do from here is you're going to want to put it on your chart. And then what I would suggest is you turn all this off, right? So I would turn off the extend POC, right? Turn off all of this. I would go in the styles, and I would get rid of, you know, the value area high, the value area low, the developing POC, the developing value area. Just get rid of those. Just use the POC line, whatever color you want. Histogram box, I like to get rid of that. You want to click this, and then you want to set the opacity to 0 so that you don't have this nonsense in the background. And yeah, ta-da. So now you have your indicator set up, and you can mark your level. So what I'm going to do is, just to show you guys how to make these levels, is I'm going to start off over here. So what you're going to want to do is you're going to want to, based on the POC line, you're going to want to get a horizontal line, and you're going to want to click it. And what I like to do is I like to zoom in on the scale, and I like to drag that sucker like that. And literally all we're going to do is we're just going to do this, and we like to make it so that we have a lot of the like most current days, right? So let's just pretend that, you know, these days, I went back a little bit in time, but you know, we have these days, right? And we are going to start trading starting, I don't know, let's say that we start trading this day right here. So we have all of these levels. So these levels would all be marked out before we start trading this day. So now we turn this off. Okay. So now we can see we had this level, this level, this level, this level, and this level. So we have 1, 2, 3, 4, 5 levels. And what you'll see is now that we have all these levels marked, you can trade these levels in a multitude of different ways. So if we go to the drawing board and we just go through some conceptual things, let's say we have like 3 levels like this. And let's say price kind of doing like what it had done earlier. So we kind of like did this and we went down like so. Now what we are seeing is we're seeing price went up like this and then it retested like this and then it went up. So how can you apply this to the real world? Well, what we are going to want to do is we are going to want to enter a buy right here. Right here we have a potential buy zone, right? So this would be a buy zone because we broke and we retested on our level and then we went up. So this would be an example of a potential trade. You trade the retest. So if we go over here, we'll do trading setups, break and retest. Two, what can we trade? We can trade rejections or bounces. So if we traded a rejection or bounce, basically what that would look like is if we had a zone that hadn't really been touched much or it hasn't been touched in a while and price seemed to be somewhat overextended. So right here it had a big move up zone to zone. So we might be thinking, oh, let's try to do a sell right here. So we go over here and we sell. So what happens here? Well, the price could just stop you out and go right to the next zone. You just never know. But with this zone, we have a feeling based on past performance that there's a good chance that there would be either a rejection or a fierce follow through. So it'll be a quick trade and we can set our stop somewhat over here and we could set, you know, multiple take profits. So you could do something like this where you go over here and you have a short right here like this and you would set it at like 50% and you do like that. So it's like a 1 to 2, something along those lines, whatever you're comfortable with really. But you know, if it goes too far above this level, you know, our trade idea becomes invalidated. So our risk shouldn't be like all the way touching this zone. Our risk should really be like, you know, a little bit above it, give it a little bit of wiggle room because, you know, sometimes it can wick the zone and whatnot and fake it out. But, you know, halfway would be like strong feeling of, yeah, the trading idea probably just didn't work out. So, you know, that's something that you can play with. And, you know, there's also partials. So you could do something like you have part of the trade goes only down to here. So part of the trade goes down to here and then part of it goes over here. So you have like a take profit 1 and a take profit 2. So there's multiple ways that you can play this, right? And then in addition to this, you can also trade breakouts. So trading a breakout would be like, you know, the price is, you know, it's coming down here like this and we've already had 1 test, 2 tests, and then boom, this third one, we're going to try a breakout trade. So you could try something like this where, you know, right here, we are going to try a breakout right here. That would be a good example of a breakout trade. And the reason being is because, you know, you had this 1 and then you have this 2. You know, you have this 1, 2, 3, and then that's your breakout trade. So these are the 3 trade setups that I would recommend. You can play with this and formulate your own types of trades, but these are 3 that I would definitely recommend you try out and backtest, because what you'll find is that you can be very effective using these volume levels, knowing that there's a high probability of a strong reaction in these areas. And you'll see these reoccurring patterns where if you test the level a couple times, there's a good chance that you could have a nice breakout to the downside, for example, in this scenario. Or, you know, just other scenarios that you'll pick up on, like this classic break, you barely go above and then you retest and then you buy right around that level. It could be a little bit above, or you buy right at the level, whatever you're comfortable with, and then it'll just continue on going. And that's a very common one. The break and retest is probably probably your bread and butter. It'd be the easiest one to be very efficient with, very effective with. But you know, these other strategies would be very good to complement it, and you could also find great success with those as well. So I would definitely try these out on your own, and I hope you find this to be very informative, and let me know what you think down in the comments below. Thanks.